Ladies and gentlemen, K Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is down about 2% there on the S&P, 2.3% on the S&P. Market is down pretty much across the board. NASDAQ, Dow, Russell, they're all down about 2%. Banks got hit much harder today after the news that was hit last night. So all the bank stocks pretty much tanked today. But so on this weekend video, we will look at things more extensively today. We will cover only S&P today because I want to focus a little bit more on the equity side. I got a couple requests throughout this week. So we'll look at Apple, Amazon, Tesla, Facebook, Work, Boeing, and we'll look at how the gold is doing, and we'll end the video with Bitcoin. So I think at this point, you know, we were seeing a lot of volatilities. We're seeing a lot of up and down movements. We were seeing a lot of shenanigans, gap up, gap downs. And that's kind of what we've been witnessing last couple of weeks. You can see here with a big bounce, gap up, continue lower, gap up, lower, gap up, lower. And then we thrust higher yesterday and then gap down flush today. So it's been very choppy environment, and it's been very, very hectic environment also, which we've been talking about in the last couple of weeks, that that we're going to be continue to be in this hectic environment, and as long as these reversal gap is still there, and bulls were not able to fill those gaps, and because of that, the longer they stay open, we talked about this when it was first open back in June 11th, right? The longer they stay open, the more it's going to be hectic for their buyers going forward, and we continue to experience hectic environment. So the question is, are we getting into the support level where the market could bounce? Maybe this is a pullback within a primary term uptrend before another leg higher, or do we see something change in this market's character, where the market could potentially see more pain to the downside, right? We're gonna try to figure that out in this video coming up right now. So let's actually go into our 65-minute chart and follow up from what we talked about last night. So last night we talked about this is where it closed last night, and then we gapped down, we flushed right through, right? And then, so that's first hour, second hour, third hour, fourth hour, fifth hour, sixth hour. So you can see for about 3-4 hours, we're hanging around here. There's some dip buying activities that has occurred, but was not able to hold, was not able to see any kind of move. I think that abrupt move, whenever you see kind of an abrupt move up and down, a lot of times, it's difficult to hold back up, especially the fact that we're still in a short-term downtrend, right? Shorter-term downtrend. We've been talking about how we still have these lower highs there, right? And yesterday we talked about, is this going to be a lower high potentially before going lower? And this was a reason why I gave short-term sentiment as bearish, right? I was labeling it, I was categorizing this market sentiment as bearish in the short term last night. And midterm, I was giving it neutral to hectic environment. And the funny thing about that is because that my midterm moving average here, I've tightened a little bit on that midterm moving average. So I've tightened a little bit. I added a new moving average here. So if you don't know more about that, the settings, you can go to the description section and you can find it out. So with this move, we can see that my midterm moving average, it continues to decline to the downside, right? This is a first time since the March lows where price is now breaking below my long-term, that pink moving average there. It seems that every single time when my long-term moving average, when the price come down and hit that level, it seems like every single time we saw the reversal. We saw initial bounce. And yesterday we actually did see that initial bounce. Today we broken below it. This is the first time we're seeing this. So we got a little bit more selling pressure today versus any other time in this rally. And you can see that now my midterm moving average, that blue dotted moving average, it's been moving sideways quite a while now. You can see that right there. We did see some brief moment where it was moving sideways here, but not as long as this, right? So it's been moving sideways. We really didn't see any kind of attraction to the upside. And this was why yesterday we talked about how this moving average was still declining, right? Still declining. That was why I had to give short-term sentiment to bearish, even though my very, very short-term moving average is right there, the squiggly line, price got above it. Because there are many times where price did get above it. Here, you can see here, 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 and just was not able to find traction to the upside, right? So I think as of today, as of this now, as the price that I can see at this point, as it is kind of just hanging around at 300, benefit of the doubt goes to sellers in the short term. Benefit of the doubt is, I would have to say, neutral to bearish in the midterm. And I'm going to explain to you why when I flip back to daily chart, right? So midterm, I am neutral to bearish looking at 65-minute chart. But once I flip back to daily, neutral, it will be neutral in the midterm. So you'll see that things are a little bit different when you look at a daily chart, right? And on the longer term, despite the fact that price did gap below my longer term moving average, but what's important is you're gonna get some whipsaw here and there. What's important is that thing is still rising, and that's a long term moving average. So it's not gonna, you know what I mean? It's not gonna flip back and forth too much. So my long term moving average is still rising, even though we got slightly below it. So I am still giving it bullish in the long term, right? And I added a second long-term moving average here. And I think because 297, 295 is going to be an important level. And you can see here on the oscillator, this is the first time also on the oscillator that we saw initially cross to the upside, which happened yesterday. We crossed back down today, this morning. I was tweeting things out this morning. And this is the first time. This is the first time we saw since the March lows. Because every single time, right, we talked about it yesterday, every single time when we saw a cross, after it came down to the oversold level, the near the oversold level, every single time we did see my oscillator going right back up. This is the first time that we didn't see that. So something has changed. What it tells us is that we have a bit more selling pressure at this point. So bears are starting to get a little bit tired though, because you can see last time bears did bring it down to this level here. We got a little bit of more room, right? So you can see we got a little bit more room to the downside. With that, if the price continues lower, 297, 295 next week, we're gonna hit that oversold level. And we will see a bounce. When we get to 297, 295, we will see a bounce. Only question will be at that time is, are we seeing a bounce to make another lower high before falling lower? And that's what bears want to see. Bears want to see cultivation, lower highs and lower lows continuing. Or is it going to be a reversal where, you know what I mean, bears going to bring it back up and continue higher, right? We'll know more about that going into next week, and we'll re-examine that. But for now, with the data that is at hand, looks like we're gonna come down. I think bears are eyeing on 297, 295 area. Keep in mind, back in May 26, we saw this big gap up, right? That's pretty sizable gap up. Bears did try to bring it down, failed to fill this gap. You see that? Half of it was filled, but not entirely, right? And that made things hectic for the bears. And we talked about that back in late May. Same thing happened mid-June. We saw this was one of the, most selling pressure we've seen since the March plunge. That was like 6-7% decline in one day, right? Even with that, this gap was still not filled. You can see bears tried to fill it. We still had a little bit of gap left. We also talked about That's gonna make things hectic for the bears, right? Because the gap was not filled, right? Remember, bulls are dealing with hectic environment because these gaps were not filled, right? And now for the third time, bears are coming back down to retest this level, 297, 295, strong support. And also at the same time, bears only have a little bit of energy here, and they want to maximize this. They really want to maximize this at this point. They want to bring it down to fill that gap at 295. It'll be better for the bears fill that gap at 295 versus not filling it, right? If we come down to 297, we see a bounce without filling this gap. Bulls, remember what happened last time? We saw some big up move here, right? So bears must come down, fill that gap. So if the gap gets filled at 295, that's when you're going to see this oscillator coming back down, hit that overbought level, we will see a bounce at the time, right? Keep in mind, my second long-term moving average, I just put it there today just to accommodate this level here. Basically, this moving average is telling, this my second longer-term moving average is telling us 295 is going to be strong support. It is no coincidence. It is hovering in that vicinity, the gap fill area, 295. My second long-term moving average is there. And the oscillator, we got a little bit more room to move. So it looks like bear's going to bring it down unless another shenanigan to the upside, but bear's going to bring it down. I think best bet will be maybe a big gap down to maximize what little energy that bears are working with. But if we start to continue lower, right? Continue lower, then there will be a support on 297, 295. Another thing you have to watch out is if we see a gap down to maybe 295 or 297, let's say this thing gaps down to like 297, and then at that point it's gonna fill the gap right here, right? And we're gonna, once it gaps down to 297, come and fill the gap at 295, we're gonna see some very fast bounce. Because the reason is because bears been gapping it down quite a bit. We got that, you can look at that as a breakaway gap, continuation island gap, continuation island gap. We have yet another continuation gap in this vicinity here. Another gap down while the oscillators near the lows here, near the oversold level. That could be an exhaustion gap, right? That could be an exhaustion gap. So I actually think that it will be better for the bears to just bring it down pretty hard and fill that gap instead of gapping it down. Because the problem with the gap down, let's say if gaps down, fill the gap, bulls hang around. If they gap it up, that could turn into an island bottom also. That's the thing about having another gap when you're dealing with oversold condition. When bears are kind of getting tired. It's great to see gap downs, right? When bears have a lot of energy, they can really truly bring it down. But bears done great job though bringing things down, but it took a lot of work. It took a lot of work to come back down to 300. I remember we were at 300 just a couple weeks ago. So basically, it took so much work to just come back down to this level. That in itself is bulls absorbing what? Volatility. Remember we talked about that back in May? How does bulls like to operate? If you've been watching me, listening to me, last several months, we talked about this is how bulls like to operate. Bulls like to consolidate, move sideways, up and down, right? That's how bulls absorb volatilities. At the same time, that's how bulls take a rest and wait for a next opportunity to bring it up, right? So you can see there was a whole lot of volatility here back in like April and May, mostly in May. There are a lot of up and down shenanigans, right? There are some big down days. Bulls brought it back up. Bears just came right back down to the level there. And that's kind of what we saw in the last several weeks, right? Bears brought it down hard, but bulls got back up, and then we just came down just to retest what happened in mid-June, right? So when you look at the daily chart here that you see in front of your screen right now, we are seeing a little bit different posture. Short term, I want to give benefit of the doubt to the sellers, to the bears. But in the midterm, I am neutral to bullish in the midterm when I look at my daily chart. It's a different sentiment when you look at from 65-minute chart to daily chart. Daily chart is looking at much of an overall picture here. So overall picture, the overall posture, it's still bullish, neutral to bullish in midterm. Keep in mind, you see my pink dotted moving average here, right? So we're just at that vicinity. This is a reason why I am giving it neutral to bullish in the midterm on this daily chart. In the long term, obviously we're bullish because the market has been cultivating higher lows and higher highs, right? Is that low right here in this vicinity higher than this low? Yes, we're way higher than that low. So you can see we're definitely in a different posture looking at a daily chart. Daily chart, short-term bearish, neutral to bullish in the midterm, bullish in the long term with the cultivation of higher lows and higher highs. We're in the vicinity of a higher, potentially higher low. Potentially. We don't know that yet until we see a bounce. Also keep in mind, let me actually talk about my moving average clusters. So I removed all my drawing tools and you can see my short-term moving average is declining. That's why I gave it a bearish sentiment in short term. But my mid-term moving average, which is blue dotted line, both of my longer-term moving averages are colliding in this vicinity. We talked about the same thing in mid-June. You can go and check, right? And I gave same sentiment at the time that I want to give benefit of the doubt to the buyers in the mid to long term at that time because we're hanging around, we're retesting this moving average, right? So when a market is recovering from a steep decline, right? We saw that 30%, 35% plunge, right? At the time, my long-term moving average moving sideways, right? And then price gets above it, and a lot of times it'll come down, retest that longer-term moving average as potential new support, and then gets higher. A lot of times that's what happened with the major corrections. We're talking like 20% corrections, 25% corrections. In this case, this is 35% correction, right? When the market is deciding to resume with this primary term uptrend, that's what happens, right? So what does bears need to do? Bears need to make sure that doesn't happen, right? This long-term moving average, make sure those long-term moving averages don't become support. And not to mention, we also have that rising pivot. That's a prior support, prior resistance, prior resistance, prior resistance, prior support, prior support. That's a solid support. Not to mention, we have 297 gap area there. We got all the moving average clusters there. We've been here before. We've seen something like that here, low and then a low, right? So we cannot rule things out at this point. We can't be too bearish looking at the daily chart, right? When we looked at the hour, the 65-minute chart, it did look more bearish because we've seen some of these signals where the whipsawing of the oscillator, my long-term, price getting below my long-term moving average. This is why you want to understand not only 65-minute chart sentiment, but you also want to understand the daily. You also want to understand the weekly. You also want to understand the monthly and the quarterly and all different time frames because they're all going to give us different, different sentiment, the health of the trend. So at this point, when I look at this daily chart, I just see the very, very strong support that needs to be proved that it is a strong support, which is 297, 294. This vicinity right here. It's a very, very strong support, right? And it's affirmed by my long-term moving averages. It's also affirmed by that rising pivot. And I can probably put a Fibonacci here also. That's probably the 50% level as well. You can see right here. So I measure from here, right? So I measure from here to here, because that's the important level, right? That was the move where it got up, came down, and made another leg higher. So measure it from here to here, and you can see my 50% is just right at the level at 300. And my last level of fib is hovering at 294. So you can see that we got the, we got that Fibonacci supports in that vicinity. We got the longer term moving averages there, also residing in that vicinity. We also got the rising pivot residing in that vicinity. We also got my midterm move, the blue dotted moving average is also there. And that midterm moving average does have a pretty impressive resume. You can see support, 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 support. So this is what I'm saying. When you look at 65-minute chart, we do have my longer price getting slightly below my longer term moving average. But when we flip back to the daily chart, well, my midterm moving average is still actually hanging around in this vicinity there, right? This is the first time getting that moving average is seeing some action at this point. We actually haven't hit that yet though. So my midterm move, that blue dotted midterm moving average is at 297, right? So that's what I was saying on the 65-minute chart, 297, 295 might come. We also got this rising pivot here also. That's also important level. That was prior resistance, prior support, prior support, prior support. So we got all kinds of support levels colliding at 300 and 295 level. So it is a potential level for support. And we must first see how the market behaves going into next week. So we'll come back and I'll give you guys an update on this. Obviously, we're going to be looking at it on a daily basis next week, but we'll look at some of those levels there going into next week. So I think at this point, bears, I think maybe best bet is bears maybe gapping it down below all these pivots. Gapping it down below all, that will be the best bet. If bears gap it down a little bit, trying to push the price down, there are way too many supports. Way too many supports in this vicinity. All those levels, 297, 295, 300, all those levels going to provide very solid support, right? So the best bet is bears gapping it down and just not deal with all these support levels. So that's the best bet for bear. That would be the best case scenario for the bears. If not, you will see a bounce here. And that will be another objective for next week to figure out, okay, if we do see a bounce here, are we going to see that bounce to maybe bulls reversing it back up? Is this going to actually turn into some kind of a double bottom, right? We don't know that yet. We did see a double bottom here. We don't know that if it's going to be double bottom as of today, right? I've been fair with bears saying that, well, you have to do analysis what you see. I'm going to be fair with buyers also. You can't just say we're going to bounce from here. You can't just say that because we don't know that yet. We haven't seen the bounce. We haven't seen these pivot levels, these support levels, right? Buyers materializing from it. So we're not going to get too ahead of ourselves saying that we're going to bounce. We also not going to say, oh yeah, man, this thing is going to come down hard. We're going to go to 250. We're not going to say that either. We're going to, because the market is going to give us piece of information each day, and our job is to figure out what the piece of information is going to give us. Because think just remember what the sentiment was like back in mid-May. Just right here, mid-May, how much bearish commotion there was, right? There are people are calling it the double top here, or some people are saying this was a head and shoulder. There was a lot of commotion and how quickly this market got up. So we don't want to be so quick to come to a extreme conclusion, like, yeah, man, this thing's about this 3-4, you know what I mean? Yeah, man, we can't, not yet, but understand these levels are strong levels, right? So let's follow up on that. Let's follow up on some of these levels of 297, 295, my second long-term moving average. Let's follow, and then my oscillator got some room there. Bears got a little bit more energy. I want to I decided I wasn't gonna mention it, but just because market's been doing some crazy shenanigans the last couple of weeks here. So here, I'll just mention it. It might be nothing. It might be something, right? So you can see we have lower low on the price action. We have we don't see lower low. It's a very slight. It's not much. But similar thing happened right here. That's a lower low in a price action. But we have to be fair though. That oscillator never crossed down. So that was much more strengthened bullish divergence in a 65-minute chart. It has a little bit of characteristic of it, but it's weak. It ain't like back in mid-June or back there. It's very weak. So keep that in mind. But if we do see any kind of shenanigan gap up or some crazy move to the upside in the first hour or something like that, right? Again, this market is, so much up and down shenanigan the last couple of weeks. If we do see something like that, if this thing start bouncing fast here, then that's a lower low and that's higher low. I've seen it, something like this playing out. As of today, I cannot call it. I cannot say that's what's going to happen without any kind of evidence of move. But if we do see something like that, and we do see a bullish divergence, there's a good chance that this thing could potentially get up, at least fill this gap and come up here. But we don't have that, so I'm not going to say that's what's going to happen. But I only mention it because we're at a strong pivotal level, right? Strong pivotal level with all the moving averages also colliding in that vicinity and horizontal support and stuff like that. So going into next week, overall posture should be, long-term posture should be bullish. Mid-term posture, neutral, looking at the daily, neutral, right? Short-term, bearish, right? But as far as the trend is concerned, because we're at, some important support levels, I would expect to see some kind of bounce here. We're going to see a bounce, right? Let's go to Apple. So Apple, it's obviously Apple's been extended. Apple's been in an extended level when it was at 300. It was extended when it was 317. It was extended at 340. It was extended at 360. This is why it is the most difficult endeavor, right? To try to call top, right? Trying to call top is the most, because we've seen these patterns right here. How many times we've seen these kind of stuff happening? Maybe this time's different, right? Maybe this time's different, but you know what I mean? We have to continue to give benefit of the doubt to the buyers. So when you're dealing with stock like this, instead of trying to call top, what I would do, what I've actually done with Apple is this. I was buying the dips here, right? And I held it all the way. I believe this week, just several days ago, somewhere up here, I did close 1/3 of my holdings, right? 1/3 of my holdings. So that's how you would approach it. If you're a long-term investor, or if you're kind of a longer-term trader and you start accumulating down here, something like that, accumulating shares, right? Then you could able to close out about 1/3 of it. I don't know if you had a lot, if you feel like you wanna lock in more gain, you thought this is kind of pre-extended for your time frame, maybe half. Just because you don't know how high it can actually go. Because again, price can correct through time or correct through price, right? Or the stock can correct through price or through time. So if we do correct through price, we'll probably come down to retest 326 and 314. If we do see that, I will be accumulating more. That will be a gift. But if price decided it's gonna correct through price or time, we may consolidate, or we may just continue higher. So we have to continue to give benefit of the doubt to the buyers. I don't know where the top is, and I can't call it. You trying to call that? You thought this was top. You thought this was top. You thought this was top. You thought this was gonna do this, do that. It was very, very difficult. It's very, very difficult endeavor to try to call. It's most difficult endeavor. I don't know why everybody likes to call tops, but it is the most difficult endeavor to try to figure out. And when these guys calling tops, I'm not saying couple percentage down. They're saying this is gonna crash or correct 50%. I don't think that's gonna happen at this point. I think the best case scenario will be 326. If it comes down to 314, that's a gift. I will be loading up quite heavily if it comes. I'll be happy actually if Apple comes down to 314. So let's continue to give benefit of the doubt to the buyers in the long term in Apple. Unless you're unless you're, shorting for short term, like very, very short term, maybe just to retest that potentially if market comes down next week, but we've seen some of those support levels there on spider analysis. Let's go to Amazon. I think last time I analyzed Amazon was when this thing was somewhere here. I gave you that level, right? And you can see how that's rising pivot. And there was a lot of, this is how Amazon corrected through time, right? We see a minimal pullback and then move sideways for about a month, and then we continue leg higher. You see that? That's how it correct through time. Apple can do something like that. Like all these extended stocks that you might want to short, you might get lucky, something like with Facebook, we got 8% down day today, but nobody knows. They could either correct through time by consolidating like this or correct through price. Nobody knows. It's very, very difficult. That's why I think it's, obviously for my time frame, the way I trade, the way I invest, it's better to wait for the dip and then accumulate rather than trying to short the rising stock. It's very difficult doing that. But anyway, it's bullish, obviously bullish, but we are getting extended, but I still can't tell you where the top is. I still cannot tell you where the top is. I can maybe draw another pivot there. That looks like another pivot, right? That's a prior resistance. So possibly this thing comes down here. I don't know. I can probably bring this up right there. Also, we got the prior resistance, new support, right? I'm not sure, but I want to continue to give benefit of the doubt to the buyers. However, we do have bullish, bearish engulfing candle, right? And last time we saw bearish engulfing candle right here. So that turned into 3-4 days of downturn. And if that's your time frame, you're trading through a couple days, potentially we got bearish engulfing right here also. If that's your time frame, that could give you maybe a couple days of downturn. That was bearish engulfing. And then that was just 1 day downturn. That thing just got right back up though. That was just 1 day. This 1 day decline and next day a huge hammer there. So you have to be very fast if you're trying to short these things because they can get up. Look at this thing. Next day just got up very, very high a couple days ago. Looked like there was a long, shooting star candle there. We did see just pretty much 1 day follow through. And that was actually a gap down too. That looked like a major, some people look at that as maybe a major topping signal with candles. You never want to pick tops with using candles. Maybe it works if the stock is in a downtrend. Amazon is in an uptrend in a long term. So that really didn't amount to anything. We just came right back down to the pivot and then we just continued higher. So there is bearish candles there. Possibly could get you to, that gap right there. And that's the gap coinciding with my short-term moving average. That looks like potentially if we do see market continuing lower next week, Amazon could come down there about 2617 there. Let's go to Tesla. So let's remove that. Let's see. Let's do a little maintenance here. So we got that. We got some of these gaps. A lot of those gaps not filled there. See if there's any pivot. Is there any rising pivot? There is. That's rising pivot. Prior resistance, prior resistance, prior resistance, prior support. So, and I want to bring this down to gap area. Right there, the 909, 881. So if this rising pivot doesn't hold, 909, 881 should act as support. If continue lower, we have another gap area at 851, hovering around right beneath or right at it is my midterm moving average. And we have not retested. Last time it was right here. We found support there. And ever since then, my short-term moving average continue to find support. Well, maybe this time's different, maybe not. It's difficult to say. So how you trade this thing will be like, okay, long term, you understand, okay, we are in a short-term uptrend because it is, as of today, it might be different tomorrow, Monday, but we're holding above it. We got the rising pivot here, and we got the gap here at 909.881. There isn't a whole lot, you know what I mean? If we continue lower next week, these levels are gonna act as support. So there isn't a whole lot to the downside, right? Unless you're calling it straight up, this is the top, you're just gonna guess it, and you think this is gonna come down. I don't know. But there's a lot of supports here, you know, and I want to continue to give benefit of the doubt to the buyers on Tesla. And let's continue here on Facebook. Facebook got hit today. 8%. So let's see. So we broke below my short-term moving average there. For the first time now, hitting my mid-term moving average. Last time we hit that was here. So there's some weight to it. And I think that's the level where we saw some support there. Prior resistance. Potentially a new support. I'm not sure. There was a pretty big move today though. Some gaps here. Gaps there. And I think true support is gonna be somewhere here. These levels. 203, 199. Right? So you can see my long-term moving average is residing just underneath that 203 level. That's my first level of fib. And the gap area at 200. So I think true support is gonna be at 200, 199. And I think that's gonna provide pretty strong support at that time. This one right here is really not that strong support right here. It's really not that's not that strong support. We do have that midterm, but potentially could get up a little bit, hit that prior support as new resistance, and then come down to 199. You know, 199. I mean, I might even, I don't own Facebook, but I might be interested if it come and fill this gap. If it comes down, fill this gap at 194, I might be interested in going long in that vicinity right here, right? I think that would be a good level if you're more of a longer term to accumulate. Here it's I think at this point, at this level, here will be kind of a guess situation. Like, I don't know, like if you think there's gonna be a bounce next, or they'll just 50-50 gas, I don't know. But I would like it. I would like to accumulate some Facebook longs around 199, 193. But overall posture is obviously bullish. But we haven't seen downturn like that in a while. This is first time since this plunge. So I think there's a good chance we could get down to 203. We'll see. Let's go to work. So work, we made a big move. Got to all-time high level, gap down, but there's a pivot here, rising pivot. That's the zone, support zone, right? Right there. And we're holding up above that. My midterm moving average just hovering just below that area. But horizontal pivot is also 29, 28. So I think all this zone right here is gonna provide pretty solid support. 29, 28. Anywhere below that could potentially be possibly a short setup if it gets below. But I think, yeah, I don't know if I would want to short unless this thing comes below 25. You know, I think we're gonna find some good support in this vicinity here. I think this was a good, pretty solid base, right? So you can see we got that high there, and we got the higher high, and we got the low, higher low. So any kind of decline would be a good higher low, I think. I think any kind of decline would be higher low at that point. I think that's how I would look at it. Not so much like, you know, trying to short this. Let's see here. Let's continue with the Boeing. I'm surprised Boeing is only down, you know, because you think, because I mean, Apple's down 3% on a down day, about 2.3 down day. You think Boeing will get crushed, but Boeing is holding up. I'm still holding my Boeing shares that I go long somewhere here at 127, 125 or something like that. So, let's see. In the short term of things, I think good news is we got the high. We got the higher high. I mean, long term or bearish. Long term or bearish, mid-term bearish. Because look at that. This thing, I mean, this thing coming down after a crash. So it's those higher high quickly can be dismantled. But so far at this point, as of now, with the price that we can see, we're still kind of hanging around in that vicinity there. I can throw a fib. Yep, we're just right there. So I think I'll give it these two levels, I think, right here. I think it needs to stay above that. Stay above that to cultivate low, higher low. If it continues to drip lower, we need to see a bounce for another higher low, higher high there, right? We've seen down moves like this before, right? So I think buyers want to take advantage of this because bears trying very, very hard to bring it down, right? And buyers want to see this thing bring it up and making another higher high there. So obviously Boeing is one of those things where it's bearish. It's long-term bearish, mid-term bearish. We're seeing a short-term bounce here. And, you know, it's one of those positions where you think either you think Boeing is gonna make it. It's gonna have up and down shenanigans. It's not gonna be easy, but looking at things long term, maybe years from now, you think Boeing is gonna make it, possibly come out of this and gap back to an uptrend. Either you're thinking that and you accumulate shares so long term, and I wouldn't go aggressive at all. I have a actually smaller size in Boeing. Either that, or you can try to trade it up and down. But if not, you know, it's not gonna be easy because every time when you're dealing with stock that is crashed like that, you know, sometimes you get lucky and these things go right. And there are many stocks done that, but sometimes they will come down much harder on the next downturn. I'm just a little bit surprised today. You know, I would think with a day like today, you'd think like something like Boeing will get crushed hard, but it's actually holding up well here. But, you know, these guys can move very, very fast. So there's a pros and cons, much more riskier asset at this point. That was 100% move from here to here. But that correction currently we're facing, see that's like 30% correction. All right, so let's continue here. So let's go to gold here real quick. Gold looks like potentially finally breaking out here. I still know, unless you're short term, it's hard for me to chase it up here. I'm still holding all of my longs on gold that I got in before the breakout. I think down here. And this so let's see. Yeah, I'm looking at my other screens here, and my weekly chart is starting to get. My weekly is starting to get tired. My daily is also starting to get tired. The sentiment, while this thing looks like it's breaking out, I don't know. Unless you're short term, you might try to capture maybe next move higher. I'm kind of still a little bit cautious. I still think there might be, you know, some pullback or something like that. I mean, when you go to weekly here, you know, you see the gold had a nice, this is a weekly chart, nice bullish run, right? And we've seen something like that happen before. Sometimes they correct through time right here. You see that? It corrected through time. That's why I'm still holding my full longs. Oops. Right here, it corrected through time. We had a move sideways. But I mean, now we look at that, doesn't look much, but if we zoom in, that's actually probably, if you look at a daily chart, that's probably a, you know, let me see. Which one was I looking at? Yeah, this one. Yeah, that's, you see right there, correcting through time. Let's see. How much of a correction was that? 7%, not bad. Yeah, that's definitely correcting through time there, looking at the longer term picture. So, you know, you're gonna see something like that before going higher. And right here too, you see thrust, correcting through time before going higher. Oops, why is it like that? Before going higher. But there are times where it's actually going to correct. It's actually going to correct through price. These are actually much bigger corrections right here. In this one, you can see, yeah, that was 13%. That was 13% correction. So sometimes you'll correct through time, sometimes correct through price. So far, it looks like it's actually a good consolidation, good cultivation of correcting through time. But my weekly oscillator is hitting there. But again, in an uptrend, sometimes you see right here, see like this thing just stays at the top like that. And look at the price. Look at the price. Look at the price going up there. There's some volatilities here, but remember we said there was only 7%. So sometimes my oscillator stays at the top even after it is overbought sentiment. That's something you might see in an uptrend. So here we might see that, and then the price continue higher. We'll see. But it's tough to chase it up here for me, at least unless you're short term. For me, it's tough to start going long here, adding long there. I'm just holding full what I got in before. Let's go to Bitcoin and this video. So we talked about this last week. After that little poke there, that became a kind of that trap, right? Like, you know, we're still in a downtrend in Bitcoin. And how many times? 1, 2, 3, 4 times Bitcoin attempted to break out, and that failed. We saw some up moves here and there, but definitely that didn't work out. Things got really hectic there. Bitcoin needed to go up here and neutralize this downtrend, and they were not able to do that. And then we still today have lower highs, lower lows, and that's what you call downtrend. So, and then to make things a little bit more worse, that's potentially a double top there, and that's a neckline. We just broke the neckline, and looks like we're gonna come down here to fill the gap at $8 per share on GBTC. And so that's, you know, that's kind of what I thought it was gonna happen when we saw that kind of that fake out to the upside there. There's more fake outs there's more fake out to the upside when there's a downtrend. When the market is in an uptrend, there's more fake out to the downside. Like that thing looks like it's gonna break down and then gets up. It's gonna looks like it's gonna break down and then gets up, right? There's more of that in an uptrend. There's more of this kind of fake out in a downtrend. So keep that in mind, because people get really excited, you know, when everybody's looking at same resistance levels, and then it looks like big breakout, and the market just goes to the opposite side. So, well, so let's see how the market plays out going into next week. We have, as I've demonstrated and presented in this video, that we do have, if I just recap everything, looking at the 65-minute chart, we do have much more selling pressure today than we've seen before, right? And so we saw continuation to the downside today, despite the fact that we saw some up move yesterday. But looking at the daily, the posture is a little bit different, because we're colliding here in this vicinity at 300, 290, 295-ish level. It's going to provide a solid support going into next week. So we'll have to come back, and I'll have to update you guys on this, and it'll be interesting to see how the market behave in this vicinity. We'll go from there, right? Well, thanks for staying for almost an hour of video, but you guys enjoy your weekend, and good luck trading next week.